How's it going, everyone? January 16th. If this is your first time to the channel, I like to do daily reviews on the broad stock market as well as a separate video for the Canadian MJ space. So if you guys would please subscribe to the channel, I try to give valuable content every single day, and it does help to touch base on a daily basis, see where things stand, and see if we can find any clues where we can take advantage of and make some money. So, with that being said, going on to the S&P, today we had a good day, up 20.24%. This little guy here, a little upper wick of profit taking. Notice how the volume is starting to dwindle off and dry up a bit. Nothing too crazy because we're just coming off of this bounce. So as of now, the real level of resistance that's very clear is all the way up here at about 280. We obviously have a ways to go before we get there, but as of now, the bulls look good. There are no red flags right now, in my opinion, and mainly I'm just looking at the hourly uptrend. We did barely breach it on this candle here, but with zero follow through, ended up trading sideways and then continued to a higher high. So bulls are in full control. Until this hourly uptrend breaks, then we will know the daily lower high is likely in, and we'll be looking for consolidation. So, Apple, we had a viewer comment, Mario, says, so it looks like Apple closed just above the 154.53 level you mentioned. The 159 is the 30-day simple moving average, right? Okay, so a couple things, Mario. We're going to go to the daily time frame here. So the middle Bollinger Band, this red line right here, the middle Bollinger Band is actually the 20-day simple moving average. But you're right, it is a good thing that we did close above the middle Bollinger Band. Now, it's not at 159. It's, let's see if we can really see it. It's probably right around here at 153.70-ish is where the Bollinger Band closed today. But notice that we did close above the middle Bollinger Band. That is a good sign. And more in particular, we did surpass that key level that I was looking to beat, right? 154.53. That was key. So we're going to take a step back and look where we are right now. This could be the beginning of a trend change, right? We've been on a daily downtrend for multiple months. Ever since October, we broke the daily uptrend right here, this little wick, broke some key resistance, sideways action for a couple weeks, and then the daily downtrend started. So to reiterate, a change in the trend will be going from, we have these lower highs and lower lows, to then setting higher highs and higher lows. So right now we're breaking a key daily level of resistance, which is just another lower high that was set, which is that 154 level right here. And then obviously we have another one up here. So what the bulls are looking to do, we obviously broke through one resistance. We're going to see if we can break through two. And now if we can break through two, that's great, that's awesome. But what I would be looking for as an entry point is to enter upon consolidation. So if we zoom in, here, let's go to the hourly. And what I mean by consolidation, we have to form a higher low compared to this low of 142, right? So the bulls could break up a little more for a couple days or even the next week, and then we might see a little bit of consolidation, and depending on how that consolidation looks would determine if I get an entry. So to go in depth a little bit on that consolidation, I would like to see less bear volume than the bull volume. So if we consolidate, we start dipping, but the bear volume is very small, not a lot of volume, that is ideal for the bulls. And I would be looking to get in on that consolidation, right? So if we form a higher low compared to 142, that is good. That means the daily trend has changed. We've come up a little bit. We're going to consolidate and then likely make another move up. Now, when will we start to consolidate? So here was that daily lower high that I said that we needed to beat. And as you can see, we just barely broke it. Just barely broke it on the hourly time frame. So it would be nice to see some follow through and this hourly uptrend continue. However, keep an eye out for that hourly trend. If that hourly trend does change, we're going to be looking for that daily consolidation, which is fine, but we have to stay above this 142 level. Right, so this could take several days, several weeks to play out and really see a true daily trend change. But I will be following this and I will be noting it as we go along the way. So Mario, thank you for the comment. It doesn't. I wouldn't consider this an all-in, go all-in Apple moment. If you want to fight some of the FOMO feeling, you want to have something in the game just in case it goes up. It's not a bad idea to scale in with small positions. That way, if the trade does not go according to your plan, you have a small loss instead of a larger loss. And vice versa, if you throw in money and it does go up, great, you made a little bit of money and you fought that, that fear of missing out feeling. At least you have some skin in the game, and then you can always enter more in on consolidation. So just throwing that out there with Apple. Apple's looking good. I'm very proud of Apple. Go to Facebook, see how Facebook is doing. Okay, so Facebook did what Apple did a little bit ahead of time. Yesterday we poked up above that key level of resistance. That was bulls needed to break that, and we did. And today we saw an daily inside bar, less bear volume than yesterday, which is good. The breaking of this resistance level is great. That proves to me that the probability of bulls changing the daily trend increases. However, what will greatly increase that chance is if we do form a higher low. Guys, we really do have to form that higher low in order for a true trend change to occur. Because yes, we did break this level of resistance, and this goes for Apple as well. But what happens if we just have a huge major sell-off and then we break that low? We have to hold that low. That would be a key stopping level for me if I were to enter Apple on anticipation of that higher low. If I'm entering and the stock's consolidating, that would be my stop level. Because if we break that level, then the downtrend continues. So it is very key. We have to form a higher low and then see continuation. And we'll look on Facebook on the hourly time frame, see how we're doing. Okay, yeah, bull's looking good. Again, briefly broke it on this candle with zero follow through. Bulls rocketing up all day. I believe that was yesterday. And then today we just had some slow grinding consolidation. Nothing out of the ordinary. This is perfectly okay on the hourly time frame. However, tomorrow, I really hate to say it, but this is the level we'd have to hold, and that's a big, it's a big difference from 147 all the way to 141. Be careful if we do see a huge sell-off tomorrow. Just be careful if you're going to be entering in positions. But longer term, I do like Facebook, and again, and this is going to take a few weeks probably for this to play out for me to see that higher low form. But keep an eye out for that. It's I believe Facebook could be trying to turn around. So, and again, the hourly uptrend is doing okay. So I'm not sure how much we can run, how high we're going to run, but, bulls are looking good. I'm pleased with Facebook. All right, let's go to Amazon. Okay, go to the daily time frame. Ooh, we're getting close. So bull saw a nice day to start, but we closed with looks like an inverted hammer there. Not too big. There's not a huge upper wick, but nonetheless still an upper wick to indicate profit taking. That was one hell of a bounce for Amazon. Let's look at the daily time frame. Again, this is the next level of key resistance up here at 1778. Let's look at the hourly time frame. Okay, so here's where we kind of lost the uptrend bit here, and then boom, back up to higher highs, higher lows. The hourly trend actually is okay right now. This is a short hourly uptrend, granted. So anything under 1652.94 would be a red flag. If we do break below this level, that would be a red flag for me. But again, I think Amazon's kind of looking toppy on the daily time frame. But that's just me. All we've really set is just a lower high compared to these lower highs right here. So I'd be cautious. But that's just my idea. Obviously, form your own game plans and whatnot. Netflix. Man, this thing was a beast. So we are getting toppy on the daily. We are getting overbought on the daily. I would definitely be cautious. Yes, this is due for daily consolidation, and I think it would be a great entry on daily consolidation. In my opinion, we could come all the way back to 300, which would be perfectly okay by me. And this could take several weeks again to play out. But, just keep in mind we are very extended on Netflix. Very extended. It was overbought on the hourly time frame. We're cooling off. Technically, the hourly uptrend is okay. It is intact. We have these higher highs, higher lows. And until that hourly uptrend breaks, that's when the daily consolidation is going to happen. Just be careful because it could be sharp because we've run up so much. Okay, let's talk about oil. As you guys all know, I'm keeping an eye on oil very close. It's getting tight. So if we look on the daily time frame here, it could be a bull flag shaping up. Again, the inverse head and shoulders pattern that I'm keeping an eye on. This being one shoulder, this being the head, and looks like we're trying to form the other shoulder now. And I am bullish on oil. It's just waiting for the right time to buy, right? So this does look like a nice bull flag, a little bit of daily consolidation, trading sideways. And ideally for the bulls, we'd want to break 53.29, and I would be a little patient on the bear side if we broke 50.39. So those are the kind of the key levels I'm watching on oil. And if we zoom into the hourly, here's where that consolidation started, and it just kind of went sideways, and then we popped up a little bit, formed a higher high compared to this, or higher low compared to this low. I would keep an eye on oil. If we go above that 52.50, actually, I'm probably gonna start initiating a position in anticipation of breaking that 53.29 level. So I would play USO if I were to go in heavy. And then if I wanted to play a leverage ETF, I would do UWT. So, cover gold real quick. See what's going on with gold. Wow. Talk about a tightening range going sideways. That's ridiculous. Yeah, daily time frame is still grinding sideways. Guys, again, so if you're looking at gold miners, any gold plays, keep an eye on gold. It's going to be a really clear break. You can see all these upper wicks are pretty much resistance and then support down here, and we're getting tight. It's going to be a drastic break up or down. So I would definitely keep an eye on gold. I would say above 12.95 would be a bull signal, and maybe below 12.86 could be a bear signal. So just something to keep in mind. And that's pretty much it, guys. So again, thank you. If you guys have comments or questions, I'm more than happy to talk about them or address them. And have a good night. We'll see you guys tomorrow.